The current live price for IREN Ltd, also known as IREN Energy, is $56.56 as of the market close on May 12, 2026, marking a 2.56% increase during the session. While the headline figures show a solid daily gain, the real story here is a massive divergence between what the market expects and the aggressive, high-stakes pivot the company is currently executing. Most investors are looking at IREN through the lens of a Bitcoin miner trying to stay relevant, but the reality is that IREN is effectively dismantling its old self to become an AI infrastructure heavyweight. This shift was underscored just days ago when the company missed both revenue and earnings estimates for its third fiscal quarter, yet simultaneously announced a massive 5-year strategic partnership with Nvidia. This is a classic case of short-term pain versus long-term ambition, and if you're only looking at the quarterly loss of $247.8 million, you're missing the fact that their AI cloud services revenue nearly doubled in a single quarter. Expectations for IREN were originally built on the back of the crypto bull run, with many assuming the company would just keep stacking hash rate to capitalize on digital asset prices. However, the reality is that IREN is decommissioning its mining hardware at a rapid pace to make room for 150,000 GPUs. This transition created a significant revenue hole this quarter, as Bitcoin mining revenue fell to $111 million from $167 million in the previous period. For a casual observer using the Robinhood app or checking their individual brokerage, this looks like a business in retreat. But the hidden reality is that they've already secured $3.1 billion in annual recurring revenue under contract, including a staggering $1.9 billion deal with Microsoft and a fresh $3.4 billion contract with Nvidia for their Blackwell chips. This is the tension that keeps the stock volatile. The market is being asked to value a company not on what it's earning today, but on the gigawatts of power it has secured for the next decade. When you look at IREN stock, or even compare it to something like Nvidia stock or Apple stock, you have to realize that IREN is essentially a real estate and power play disguised as a tech firm. They own the land, the substations, and the data centers. While many AI startups are struggling to find power, IREN has a 5-gigawatt pipeline. This is why Nvidia isn't just selling them chips. They've actually taken an option to buy 30 million shares of IREN at $70 per share. That's a massive vote of confidence from the most important company in the semiconductor world. If you're into online investing or use platforms like interactive brokers to hunt for asymmetric bets, this is the kind of data point that forces you to rethink the miner label. The company is currently on track to reach $3.7 billion in annual recurring revenue by the end of 2026, and they are doing this while trading at a fraction of the valuation of traditional data center REITs. The recent intraday movement reflects a tug-of-war between institutional accumulation and retail skepticism. We saw the stock dip significantly after the earnings miss on May 7th, but it has since started to claw back those losses as the Nvidia partnership details sank in. Institutional activity has been quietly building, with larger players recognizing that the decommissioning of old mining rigs is a necessary cost of upgrading to high-margin AI compute. For those of you managing your own portfolios through Fidelity or Schwab Intelligent Portfolios, the question is whether you believe IREN can execute this massive build-out in Texas and British Columbia on schedule. The market is pricing in a lot of execution risk right now, which is why the stock is trading well below its recent highs despite the massive contract wins. Comment below how many shares of IREN you currently hold, or if you think the transition from Bitcoin mining to AI is a mistake for companies in this sector. It's polarizing because it fundamentally changes the risk profile of the investment. Let's look at the business model for a second because it's where the common ground ends and the deep analysis begins. The general belief is that any data center can host AI, but the reality is that liquid-cooled infrastructure for Blackwell GPUs is incredibly hard to build. IREN's Horizon 1 project at their Childress site is specifically designed for this. They aren't just putting servers in a room, they are building highly specialized environments that very few companies can replicate at scale. This is their moat. While Bitcoin mining provided the cash flow to build the initial power infrastructure, the AI cloud service is where the high-margin growth lives. AI cloud revenue jumped 94% this quarter to $33.6 million. That's a small number compared to their total revenue, but the growth rate is what you need to focus on. They are essentially a startup inside an established power infrastructure company. If you are using investment help or looking at investment sites for guidance, you'll see that IREN often gets lumped in with other miners like TeraWulf or Applied Digital. However, IREN's vertical integration is much deeper. They don't just lease space, they own the entire stack. This allows them to maintain an adjusted EBITDA margin of 41% even during a massive transition phase. They recently acquired Mirantis to beef up their software and engineering capabilities, which is another signal that they are serious about being a service provider, not just a landlord. This move helps them serve a broader range of customer requirements beyond just the big hyperscalers like Microsoft. It's a move toward becoming a full-stack AI cloud provider, which is a much more valuable business than just selling raw compute power. Looking at the future outlook, the catalysts are clear, but the risks are equally sharp. The biggest catalyst is the ramp-up of the Blackwell GPU deployment in early 2027. If they can stay on track with their 480-megawatt expansion by the end of this year, the revenue numbers will start to look very different by this time next year. However, the risk is their high debt load and the constant need for capital. They have $3.7 billion in convertible notes, and while they have $2.6 billion in cash, the capital expenditures for these data centers are enormous. They are relying on GPU financing and customer prepayments to fund 95% of the Microsoft build-out, which is a smart way to manage the balance sheet, but
but it leaves very little room for error. If there's a delay in chip delivery or a slowdown in AI demand, the pressure on the stock will be intense. For those of you who use the SoFi trading platform or check your Fidelity ETFs regularly, you know that the macro environment is also playing a role here. Inflation concerns and rising energy costs are always a threat to data center operators. However, IREN's focus on 100% renewable energy and their strategic locations give them a bit of a buffer against volatile energy prices. They are positioned in areas where they can get low-cost power, which is the ultimate currency in the 2026 economy. The expectation is that AI demand will be insatiable, but the reality is that only the companies with the most efficient power access will survive the inevitable margin compression in the cloud space. IREN is betting the entire company that they are one of those winners. In summary, IREN is a company in the middle of a radical identity change. The market is currently punishing them for the costs of that change, the earnings misses, the impairments, and the decommissioning of old assets. But the reality is that they have secured partnerships with the two most important companies in the AI space, Microsoft and Nvidia. The expectation of them being just another Bitcoin miner is being shattered by the reality of their 5-gigawatt power pipeline and their billions in secured contracts. While the volatility is high and the debt load is a concern, the strategic pivot they are making is one of the most ambitious in the tech sector today. They are moving from a volatile commodity-based business to a high-margin, contracted infrastructure model. The contrast between the current stock price and the potential annual recurring revenue of $3.7 billion suggests that the market hasn't fully priced in the success of this transition yet. Whether they can execute on this scale is the billion-dollar question, but for now, they are holding the keys to some of the most valuable power and compute assets on the planet. Keep a close eye on the construction milestones at Childress and the ramp-up of the AI cloud revenue in the coming quarters, as those will be the true indicators of whether this pivot will deliver the massive returns that the Nvidia partnership suggests is possible. The tension between today's losses and tomorrow's contracts is exactly what makes IREN one of the most intriguing plays in the current market. Keep your focus on the infrastructure, not just the ticker symbols, as that is where the real value is being built. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, outshare with your friends, bell subscribe for more updates.